look at the AI boom, right, it seems completely unstoppable. But is it maybe about to hit a very real economic speed bump? We're seeing this really weird situation with a chipmaker post absolutely stellar numbers, a real win, and yet the market punishes the stock. What's going on there? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're digging into Marvell Technology, that's ticker MRVL. This is based on our research and the data we pulled September 2, 2025, around 7:10 a.m. Eastern. And our mission, really, is to figure out this conflict. Is Marvell's current slump a golden buying opportunity, or is it actually a warning sign, that even these AI giants can get tripped up by bigger market worries?
Yeah, and to get that, you have to look at the market mood first. And honestly, it's pretty grim right now. Pre-market futures are just swimming in red. The NASDAQ, the tech-heavy one, down almost a full % already.
Oof.
Exactly. And it's not just a random Tuesday thing. We're actually hearing economists, big names from Moody's, from Barclays, they're openly talking about a 50% risk of a U.S. recession. Like 50%.
Wow. Okay. That's significant.
It is. And that kind of talk, it triggers this almost primal reaction in the market. It's sell first, ask questions later. It's a classic risk-off environment. Investors are just scrambling for safety.
Okay, so that's the backdrop. Tough. But then you zoom in on Marvell itself.
Yeah.
And the story feels completely different, almost baffling, actually. This company is, it's a beast in data infrastructure. They make the silicon, the chips for data centers, for the network edge.
Yeah.
Essential stuff. And they just had this knockout earnings report just last week.
Yeah, incredible numbers.
Record revenue, over $2 billion. That's up, 58% year over year? Just staggering.
58%. And it's driven by that insatiable demand for their custom AI chips. They've even got this groundbreaking new chip interface everyone's talking about.
Right, and Wall Street sees it too, mostly. Over 76% buy ratings from analysts, not a single sell call out there. The fundamentals look solid.
Textbook strong fundamentals.
So here's the puzzle then. Our own valuation models, they're projecting maybe 22% annual revenue growth. And that puts fair value potentially as high as $90 a share, $90. Yet the stock's trading down near $63. So what gives? How is the market seemingly ignoring such strong data?
That is the question, isn't it? It really throws that whole fundamental strength versus market sentiment battle into sharp relief. If you peek into the options market, there's actually a slight lean towards optimism. The put-to-call ratio is 0.93.
So slightly more calls than puts. Bets on it going up.
Slightly more, yes. Suggests not everyone is betting against it, and the big players, the institutions, they've kind of drawn their lines. They see maybe an 81-1 ceiling potential, but also a really key defensive floor right around that 63 to mark where it's trading now.
Okay.
And short interest. It's moderate, under 4%. So people are hedging, maybe cautious, but it's not like an all-out short attack.
So sentiment isn't pure panic then?
Not pure panic, no, but, and this is the big but, you connect that to the wider market fear we talked about. And then you look at the technicals, the charts. And that story is just, it's brutal. It's the unfiltered market reaction, and it seems to be overriding everything else right now.
How so? What are the charts saying?
Well, the stock didn't just drift lower. It gapped down hard, opened way below the previous close. That signals real panic selling right at the bell. And that move just sliced through every major support level like they weren't even there. Buyers just vanished.
Wow.
And the volume, huge. This wasn't a trickle, it was a stampede for the exits. Massive cash outflow, which tells you the big money institutional investors, they were selling hard, high conviction selling.
So the momentum just died.
Completely evaporated. Gauges plunged deep into negative territory. That signals really intense accelerating selling pressure. And volatility, which had been kind of calm, it spiked dramatically. It shattered the lower boundary of its recent trading range. That's a big warning sign of turbulence ahead.
Okay, so despite the fantastic fundamentals, the record earnings, even that slight optimism in options, the technical breakdown is severe. It sounds like fear, maybe algo trading, reacting to fear, is just running the show. All right, so pulling all this together, the gloomy macro picture, Marvell's great numbers being ignored, and this really ugly technical damage. Our research points pretty clearly today towards a bearish outlook.
Yes, a bearish outlook for now. And the why is so important here. Marvell's great earnings. They're fantastic, but they're history now. They're in the rear view mirror. The market always looks ahead. And right now, it's staring right at those recession fears we mentioned.
So the macro is just overwhelming the micro, the company specific.
Exactly. Those broad anxieties are amplifying the technical damage, basically drowning out that strong fundamental story for the time being. It just shows how sometimes sheer selling pressure, that market sentiment, can completely bulldoze a company's underlying strength.
So what's the game plan for today then? Where's the key battleground?
The fight is absolutely at that $63 level. That's critical. If the sellers keep pushing the price below $63, that level then flips and becomes a new ceiling, resistance.
Got it.
And keep a close eye on the key support from the pre-market low, roughly $62.50. If it breaks decisively below that, that could very well signal the next major leg down for the stock.
It's definitely a stark reminder, isn't it? Even these incredibly powerful AI growth narratives can get humbled when the broad market gets the jitters. And it makes you think. Marvell's situation really highlights this tension. How do you navigate solid company performance when these huge economic waves are crashing? When does that market fear actually trump the fundamental reality? Definitely something to chew on. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.